You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome, Deep Divers. Great to have you with us. Buckle up, because today we're really cutting through the noise with a vital deep dive into the latest global markets and geopolitical briefing.
That's right.
Our mission, as always, is to sift through all those headlines, pull out the really crucial nuggets of knowledge, and, connect the dots so you can truly grasp the bigger picture.
Mm-hmm.
We're going to pull back the curtain on how events that seem totally separate, like shifting jobless claims in one place, the price of oil bouncing around, even those high-stakes international talks, you only hear bits about how they're all actually woven together.
Intricately woven, yeah.
And actively shaping your world right now. Okay, let's dig in.
Yeah, it's definitely more than just a list of news items. It's like this living, breathing tapestry of global forces, isn't it?
Exactly.
And our goal here is really to light up those threads, show you exactly how, say, a market reaction today can influence strategic shifts for, well, years down the line. We'll guide you through the immediate stuff first, and then kind of zoom out to the bigger picture, the long-term implications that really matter.
That's exactly right. And to kick off this journey, let's jump straight into the fascinating world of foreign exchange. Forex.
Always dynamic.
Always. Where every little move, every tick tells a story about global confidence, doesn't it?
It really does. And what immediately jumps out right now is the U.S. dollar. It's kind of struggling to stabilize.
After that drop yesterday.
Exactly. It took quite a hit yesterday. It got knocked off balance a bit. And the trigger, a pretty big surge in jobless claims here in the U.S.
Okay. Domestic data hitting hard.
Yeah. That kind of data often acts as a really potent catalyst. Markets just recalibrate instantly. And right now, investors are pricing in, around 71 basis points of Fed rate cuts by the end of the year.
71 points? Wow.
Yeah, it's not just a number. It signals a pretty noticeable shift in sentiment. It suggests a belief that, well, maybe the Fed needs to ease policy sooner, maybe more aggressively than people thought just a little while ago.
And that ripples out immediately, I assume.
Instantly. Right through global currency markets.
So, okay, the dollar's weaker. What's happening elsewhere? Like the Euro-USD pair. It looks like it's holding on to most of those recent gains.
It is, yeah.
Is that sustainable? Or is it just riding the dollar's coattails, so to speak?
That's the million-dollar question, isn't it? Or maybe the million-euro question here.
Uh-huh.
The euro's resilience, it's actually down to a mix of things. Yes, definitely benefiting from that weaker dollar we just talked about. That makes the euro look, relatively more attractive.
Sure.
But, and this is crucial, the European Central Bank, the ECB, they've sounded a little bit more hawkish recently, just slightly.
Hawkish, how?
Well, they kept rates unchanged, but the way they communicated, it's strongly hinted that December could be a really key moment for big policy discussion.
Setting expectations.
Exactly. It signals potential for future tightening or maybe just delaying any easing. And that gives the euro a deeper sort of underlying support.
So it's not just the dollar weakness.
No, definitely not. The ECB's subtle signals are also boosting confidence, it seems, in the Eurozone's policy direction.
That makes sense.
Yeah.
It really is like watching central banks play this high-stakes poker game. Every word counts.
Absolutely.
What about the British pound and the yen? How are those big currencies doing amidst all this? Are they following suit or doing their own thing?
Good question, because, they are telling slightly different stories. The pound, GBP USD, it's eased back a bit.
Okay. Seems
like mostly a precautionary thing. Markets are waiting for some key UK data, monthly GDP, industrial production numbers, stuff like that, due out soon.
So people are just holding their breath a bit.
Pretty much, yeah. Those reports could swing things. But then you look at USD JPY, dollar versus yen, that's actually edged higher.
Higher. So less demand for the yen as a safe haven.
Exactly. That traditional safe haven demand, where investors usually pile into the yen when things look uncertain globally, it's pretty muted right now.
Interesting. Why do you think that is?
It could suggest maybe global investors aren't seeing the current risks as like system-wide threats, or maybe they're just finding other assets more appealing for safety this time around. Hard to say for sure.
And quickly, any other notables? Australia, New Zealand, China?
Yeah, the Aussie and Kiwi dollars, the Antipodeans, they're kind of consolidating near their recent highs, holding steady.
Okay.
And worth noting, the People's Bank of China, the PBoC, they set their official yuan rate, the USD-CNY midpoint, at 7.101 That was actually a bit firmer than a lot of analysts were expecting.
Okay, so if we step back from the daily moves,
Yeah.
what does this whole currency snapshot tell you, our listener? Is it just noise, or is there something deeper here about economic expectations diverging?
Oh, it's much more than noise. It tells us markets are incredibly sensitive right now, sensitive to specific data points like those jobless claims, but also to the really subtle nuances in how central banks talk.
Right, the signaling.
Exactly. And the key takeaway for you is that this sensitivity, it translates into really rapid shifts in sentiment. And that affects everything: cost of trade, profitability of investments, you name it.
So it's a real-time global risk assessment.
Perfectly put. Every tick reflects these deep economic undercurrents.
Okay, let's shift gears then from the sometimes abstract world of currencies to the really tangible stuff, commodities, the things that fuel and build our world.
Yep.
Starting with crude oil, often a great barometer for, well, everything economy, geopolitics.
And it's definitely reflecting both right now. Crude futures are continuing to slide, actually. They broke a 3-day winning streak recently.
And is that just supply and demand, or is there more to it?
Oh, there's definitely more. A lot of this downward pressure seems heavily influenced by some significant geopolitical moves.
Like what?
Well, reports are swirling that the U.S. is pushing the G7 nations pretty hard.
Pushing them to do what?
To impose high tariffs on China and India.
Why them specifically?
Because of their continued purchases of Russian oil, it's a very direct, coordinated effort to try and squeeze Russia's revenues even further.
Wow, okay. So direct economic pressure.
Absolutely. And adding to that, Japan just announced it's lowering its price cap on Russian crude.
Another squeeze.
Exactly. Puts more downward pressure on the price Russia can get, potentially messes with global supply flows too.
Bro.
These aren't small tweaks. They're basically economic warfare tactics playing out.
Economic warfare. That's a strong term, but probably accurate.
Yeah.
But digging deeper, there's also something interesting happening closer to home, right? In North America.
Yes, in Canada.
Canada's talking about potentially scrapping its federal oil and gas emissions cap. That sounds counterintuitive for climate goals.
It does on the surface, yeah. But it's complicated.
What's the potential trade-off they're looking at? Is it just giving up?
Yep. Not necessarily giving up. The talk is that scrapping the cap might be in exchange for new, really stringent commitments from the energy companies in Alberta province, commitments to significantly cut the sector's overall carbon footprint.
Ah, so a different path to the same goal, maybe?
Potentially. It highlights this really intense balancing act nations are facing. How do you keep a vital energy sector going, which is crucial for the economy, but still hit those ambitious climate targets?
Right.
It might be exploring a more industry-led approach, maybe less top-down government mandate. It really shows that global tension between energy security, economic needs, and environmental goals. It forces some creative and often controversial thinking.
Yeah, controversial seems likely. Okay, so that's energy. What about metals? For folks tracking safe havens or maybe industrial signals?
Well, precious metals are actually catching a bid, benefiting from that dollar softness we talked about earlier.
Gold.
Spot gold is edging higher, yeah. Often a sign investors are a bit cautious or maybe hedging against inflation, but even more interesting is silver.
What's silver doing?
It's showing a pretty strong rally, pushed above USD 42 an ounce. That's a level we haven't really seen stick for a while.
$42. Okay, so quite a move.
Definitely suggests a significant move into perceived safety, at least in some corners of the market. But at the same time, copper futures are holding firm.
Copper usually signals.
More about industrial demand, economic optimism. So copper holding firm kind of aligns with a generally more positive risk sentiment in the wider market.
So a bit of a mixed picture then. Safety seeking in silver, but still some optimism in copper.
Exactly. It suggests that while some investors are definitely seeking safety, there's still this underlying confidence floating around about global economic activity.
So what this tells you, listening in is that these aren't just numbers on a screen changing. This is about the actual stuff our world runs on.
Absolutely.
And it's directly hit by global supply chains, political leverage, how confident investors are feeling. I mean, this whole discussion about tariffs on Russian oil, that's not just about the price per barrel.
No, it could fundamentally reroute global energy trade.
And change the cost of everything from gas for your car to, I don't know, plastic toys.
Precisely. The push and pull in commodities really shows you the practical, sort of everyday results of these big geopolitical decisions and economic policies.
Indeed. Okay, so let's pivot now. From the raw materials themselves to the intricate dance of international trade and tariffs, the diplomatic ballet, as you sometimes call it.
Yes. It can feel like that.
So what are the big negotiations, the big disputes happening right now? What do they signal about where global commerce is heading?
Well, we've got some really significant diplomatic activity coming up. U.S. Treasury Secretary Besant, she's heading to Spain and the U.K. next week.
Okay.
And a really key stop is Madrid. She's scheduled to meet Chinese Vice Premier He, along with other senior officials.
High-level U.S.-China talks, then. What's on the agenda?
The big stuff. U.S.-China national security, economic issues, trade issues, including those hot-button topics like TikTok's future in the U.S., and also cooperation on anti-money laundering.
Right. Those talks seem crucial given the tensions.
Absolutely. They're a direct channel, hopefully, for managing what's often a pretty strained relationship between the world's two biggest economies. Lots of complex issues there.
Yeah, no kidding. But even as those talks are being planned, friction seems to be popping up elsewhere, right? China and Mexico?
That's right. China has come out quite strongly criticizing Mexico's planned tariffs on Chinese goods.
What are they saying?
Warning that these tariffs will hurt the investment climate, and they're vowing countermeasures.
Is that just diplomatic noise? Or could it actually spark something bigger, like a trade spat?
It feels like more than just noise. It's a really stark example of that ongoing tit-for-tat we see in global trade.
Why is Mexico doing it, do you think?
Well, likely trying to protect their own industries, maybe deal with trade imbalances, perhaps even getting some pressure from other trade partners, you know?
Like the USMCA context.
Could be. But China's reaction, quick, strong, threatening countermeasures, it just shows how fast these local actions can escalate. Highlights how fragile global trade relations still are. One country makes a protectionist move, and boom, you get this domino effect that can really hurt global stability, investment flows, everything.
A delicate balance, for sure. Okay, slightly more positive note, maybe. U.S. trade relations elsewhere. What about Taiwan?
Yeah, Taiwan has reported constructive progress in its trade talks with the U.S.
Constructive progress, okay. What are they looking for?
They're actively seeking more equitable, more reciprocal terms. It signals Taiwan doesn't just want stronger trade ties. They want a relationship built on fairness, mutual benefit.
And for the U.S.
It's a key piece of their broader Indo-Pacific strategy, right? Solidifying economic partnerships in that region is a big priority.
Makes sense. And then there's India. Always a crucial relationship, especially around energy and that whole Russian oil question. India's been a big buyer, hasn't it?
Huge buyer. And yes, a U.S. ambassadorial nominee recently highlighted Washington's really active efforts to resolve outstanding issues with India.
And the Russian oil part.
A central piece of that conversation is a very firm emphasis on the need for India to halt its purchases of Russian oil. It's direct pressure, economic, and geopolitical.
How's India likely to react? It's a tough spot for them.
It's a really complex dilemma for India. Balancing their energy security needs, which are massive, with their strategic relationships on all sides, the U.S. is essentially trying to get everyone on the same page to financially isolate Russia.
And India's energy buying is a critical part of that puzzle.
Absolutely critical.
You see, listening to this, these aren't just some dry diplomatic reports you skim past.
Not at all.
These are direct signals about the future of your supply chains, your economic alliances. It affects what you buy, where it's from, and, yeah, how much it costs you. Every single negotiation ripples out.
And these talks are absolutely pivotal. They shape the whole competitive landscape for businesses everywhere, influence investment decisions, long-term economic plans across continents. It's huge.
Okay, so finally, let's broaden the lens one last time. The wider geopolitical landscape. Where are the active hotspots? Where are tensions really elevated? And how do those impacts ripple out, often far beyond the conflict zones themselves?
Well, the Middle East, unfortunately, remains a major focal point of instability.
What's the latest there?
We've recently seen Israeli Prime Minister Netanyahu sign off on expanding settlements near Jerusalem. That's a move that consistently draws international condemnation and, frankly, often fuels regional tensions.
Right. Always a flashpoint.
And compounding that, Qatar's prime minister just condemned an Israeli strike in Doha, called it a violation of sovereignty, plain and simple, and warned gravely that actions like that actively undermine the already fragile peace efforts in the region.
So very tense.
Deeply sensitive, significant developments. Just highlights the persistent volatility there. It's a very strained situation.
The stark reminder, yeah.
Yeah.
And connecting these regional issues to the bigger global picture.
Yeah.
What about Ukraine, the international response to Russia? What's the latest vibe there?
We're definitely seeing a renewed, maybe even intensified push on sanctions, on military cooperation.
How so?
Ukrainian President Zelensky just had crucial talks with U.S. envoy Kellogg. They focused specifically on new sanctions against Russia and also on speeding up joint weapons production.
So it's a deepening that U.S.-Ukraine partnership.
Very much so. And a continued concerted effort to pressure Russia economically and militarily. And then, in a sort of coordinated move, Japan also announced a fresh round of sanctions.
What do Japan's sanctions include?
Asset freezes, tighter export controls, and significantly that lower price cap on Russian crude oil we mentioned earlier, all aimed at restricting Russia's capabilities, its financial resources.
Okay, so there's this coordinated international pressure, especially on the oil front. The EU, the UK, they're also thinking about that U.S. push for new G7 tariffs on Russian-linked oil flows, right?
Yeah, they are, yes.
Which brings up a crucial question. How likely are those tariffs really, especially against huge buyers like China and India? What are the practical limits here?
It's a great question, because while the U.S. is undeniably pushing for stronger, wider measures, officials are kind of hinting that, well, 100% tariffs on China and India for buying Russian oil, probably unlikely right now.
Why not, if they want to squeeze Russia?
It's not necessarily a lack of will, it's more about the sheer complexity of it all. Diplomacy, economics, India especially is just too important a trading partner for many G7 nations.
Right.
Imposing those kinds of tariffs could have massive unintended blowback on those other relationships. It really highlights that critical trade-off. You want strong sanctions, but you also need to maintain vital diplomatic and economic ties globally.
So it's a balancing act, even in imposing penalties.
A very fine line to walk, often requires strategic compromises, even if they're frustrating for some.
That's a really profound insight into how messy international relations actually are. And it raises an even bigger question for you, our listener. How do these huge geopolitical chess moves, often playing out thousands of miles away, how do they ripple through economies and affect global stability right where you live? What are those second, third order effects on shipping costs, supply chain reliability? Ultimately, the price you pay for, well, almost everything, from your phone to your coffee.
Indeed. These events are absolutely not contained. They influence the very fabric of global trade, energy prices, even just investor confidence in long-term stability. Understanding these connections, these deep linkages, it's absolutely key to making sense of our world right now. It's evolving so fast.
Wow. Okay. What a journey today. We have covered an immense amount of ground, really charted a course from that immediate volatility in currencies, driven by U.S. jobless claims, those subtle ECB signals, through the whole complex interplay of oil prices, Canada's tricky emissions cap debate that rally in precious metals.
Yeah, quite a mix.
Then we navigated that intricate web of trade talks, the high-stakes U.S.-China meetings, China's pushback on Mexico's tariffs, the U.S. talks with Taiwan and India.
Lots of moving parts there.
And finally, we explored those simmering geopolitical hot spots in the Middle East and the escalating international response to the war in Ukraine, new sanctions, that complex debate over Russian oil tariffs.
Phew, it really, really drives home just how interconnected everything is, doesn't it?
Totally.
Every economic decision, every diplomatic move, every geopolitical shift, it sends real, tangible ripples across continents, influences markets, policies, in ways you might not even see at first glance.
Yeah, no.
Understanding these deep linkages, it's not just about being informed, is it? It's really essential for navigating, for making sense of this incredibly dynamic world we're in.
Absolutely. And as we wrap up, maybe here's one final provocative thought for you to chew on. Considering all these interconnected things we discussed, the constant economic pressures, the delicate diplomatic moves, those persistent geopolitical tensions, what do these dynamics really reveal about how the balance of global power is shifting right now?
Good question.
And maybe more importantly, how might that shifting landscape fundamentally reshape the next decade? For international relations, for global economic strategy, how might it directly impact the world you actually live in?
lot to think about there.
Definitely something to mull over into our next deep dive.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.